everyone, Jonathan Lopez with the GLW Group at Kentwood Real Estate here with your real estate update. Today I thought it would be a good time to revisit mortgage rates, mostly because for the first time in quite a while they're actually moving in a positive direction. Right now the 30-year fixed rate is sitting in the low sixes, approaching its lowest level in almost 3 years. But before we get too excited that rates are on a steady decline, the Mortgage Bankers Association has a different take. According to their latest forecast, economists expect mortgage rates to stay between 6 and 6.5 all the way to 2028. In other words, we may be living in a new normal for rates, not a temporary spike. Why? A few big factors. Federal budget deficits are pushing long-term bond yields higher. Inflation expectations are still elevated. And while the Fed may cut short-term rates a few times next year, those cuts probably won't translate into major relief for mortgage borrowers. The MBA expects the 10-year Treasury to stay above 4%, which is what keeps mortgage rates hovering around that 6% mark. So what does that mean if you're in the market? For buyers, it's time to shift from waiting for rates to drop to finding value where it exists. The good news is that housing inventory has improved, especially here in Denver, which is helping ease price growth and create more options. If you're a buyer, don't let the hope of lower interest rates make your decision for you. Educate yourself on the numbers and know the real math. And if you need to move the next 2 to 3 years, now may be a good time to start getting serious. For sellers, the takeaway is to price with precision. With more homes on the market, buyers have choices again. And as you hear me say all the time, listings that overshoot on price tend to sit, which translates to lower final sales prices. So while the days of 3% mortgage rates may be behind us, a steadier market with more balance between buyers and sellers can be a positive with the right strategy. Well, that's it for today. Thanks for joining, and we'll see you next time.